Good evening, fellow cooperators, and a warm welcome to the Society's half-yearly meeting. I'm Vivian Woodell, your Society's Vice President, and it's a real pleasure to be chairing your meeting this evening. Thank you for making the time to join us. I can let you know that we have 98 members logged in already, so we're quorate and ready to go. As you might know, we usually hold several half-yearly meetings in different locations across our heartland areas. However, given the uncertainty which still remains around COVID-19, the board felt it was best to continue to hold these meetings online. This is the final of 2 online half-yearly meetings, which we're holding to ensure as many of our members as possible can attend. Wherever you're joining us from this evening, I give you a warm welcome. We've put what we hope is an informative and interactive session together where you'll be able to participate and ask questions and find out more about your society, as your board really wants you to feel the evening has been worthwhile. If I can make a few introductions, in the room we have Phil Ponsonby, the Society's Group Chief Executive, Edward Parker, the Society's Secretary, and Peter Dubois, our Group Chief Financial Officer. We're being ably supported by a small team of technicians. Watching online will be your Board of Directors, members of the Member Engagement Committee and the Executive Team. I'd like to mention especially our President, Helen Wiseman, who's not well and therefore can't be with us today to chair the meeting. We wish her a swift recovery. We have a few technical matters before we get into the meeting itself. You'll see on your screens that there's a yellow speech bubble where you can click, which you can click to submit a question. You can submit a question at any time during the meeting. There's no need to wait until the formal Q&A session itself. You'll also have seen there's a help page, and if you do have any issues with the technology, hopefully colleagues on the other end of the line will be able to resolve these for you. Voting will be displayed on the voting tab on the left-hand side, and for best viewing experience, click on the Max Video tab on the left-hand side panel to maximize the screen view. If the technology fails us completely, which we don't expect, we will deem the meeting formally adjourned and have arranged a backup date of the 20th of October. Hopefully it's not something we'll need to do, but we felt it was worth mentioning in advance just in case something significant does go wrong. Finally, we'd encourage those of you who use social media to tweet from this evening's event, and we're very grateful to the people who did that yesterday. Please make sure you use the hashtag #MidCountiesHYM2021. That's hashtag #MidCountiesHYM2021. I'll run through the agenda briefly so you're aware of the proceedings this evening. First, we'll have an update from the Group Chief Executive on the Society's progress for the first 6 months of the financial year, with a question and answer session afterwards. Next, we'll present the minutes from last year's half-yearly meeting and special meeting, and then we'll have a proposal for our share of profits. We'll then hold our special meeting with proposed rule changes from the board, and this will be followed by voting on the half-yearly report, the minutes, the share of profits proposal and the rule change. Just before we go to voting, we'll check in case any questions on these items have been raised. We'll then let you know the results of the recent elections and have a final question and answer session on general items, followed by any other business, and we'll aim to finish at 8 p.m. So moving to our first item, the half-year update, we prepared a video which presents the highlights of the last 6 months, and then Phil will give us an update.
Good evening, members. It's my privilege once again to update you at the half-year stage. In a moment, I'm going to talk about the numbers across the various businesses, but before we talk about the numbers, I think it's really important that we recognise our colleagues, because we really are grateful to our colleagues and for the work they have done across our communities, and especially in these last 18 months. And I'm sure that you as members agree that the efforts they've put in serving our communities, our customers and you, our members, have been first class, and we, as I said, we really are grateful. And I think it's really important that we recognise that, and also the board are very keen to ensure that we continue to invest in our colleagues, and we invest in them in many ways, in their technical skills, by ensuring that they have all the capabilities to do the job we ask them to do. We've also been really pleased to see 66 apprentices graduate in the first half this year. We have about another 120 currently on programmes, so a really important element in terms of the colleague development. And we're also investing time with our managers to ensure they have the skills and capabilities to meet the future requirements of the business, which obviously, as you know, are ever changing. But it's not just technical skills that we're investing in, we're also spending time helping them in terms of their understanding of diversity. I think one of the great initiatives is the Let's Talk About Race training session, and we aim to put 650 managers through that by May next year, and I've attended one of those sessions myself, and I would say it's really interesting and really does open your mind up to the challenges that many in our society face. So these are the sorts of things that we're doing. We've also been busy looking at how we monitor employment and who we employ, and so we published this year for the first time an ethnicity pay gap, which as you can see on the slide there, has got a gap at the moment of about 3.1%. So work to do there, but it's only by monitoring these things that we can really start to improve and make the inroads that the board, and I'm sure you as members, would expect us to do so. So I'm really grateful to our colleagues. We've made good progress, and we will continue to invest in their development and ensuring that they are able to continue to offer you the best of service that they possibly can. So just talking about the business in a bit more detail now. So firstly, the headlines. In the first half of the year, our food sales were down by 23 million. And that's not really about what's been going on in the first half of this year. It's about what was going on in the first half of last year. And cast your minds back to March 2020 when we entered the first lockdown. And we were all guilty, I think, at the time of panic buying and stripping the shelves of stock. And of course, that led to some significant sales volumes across our stores. And then, with the lockdown coming, many retailers that would normally be offering products and services that we compete with were forced to close. And so, in many respects, we were the only retailers operating along with some of the other major supermarkets. So that had a significant positive impact in the first half of last year, which obviously have not been replicated this year, and so that's what's caused that position with food. This year we have seen our travel branches closed in the first half of the year for 12 weeks, so almost half of that trading period, the travel branches were unable to do business with an open door policy, although we did continue to maintain the online and telephone services. And it was pleasing to see that our childcare business returned to profitability in the first half of the year. And also our healthcare, post office operations made positive contributions, which are, these are small operations but very important ones to the organisation. And as we've said before, we exited the high street pharmacies during that period as well. There was a slight loss in the utilities business, but pleasing to note that the underlying position is profitable as we get the loyalty payments from Octopus in the second half of the year, so we'll see that in the numbers as we go forward. And then finally, the board made a strategic decision to exit our funeral services business. I'm not going to go through all the businesses tonight in the 20 minutes that I have, but I'm going to pick up a little bit later on our travel business and talk about that, the decision around the funeral business. We're just looking at the numbers in a bit more detail. This chart that you can see here is gross sales and revenue. Gross sales in the orange bars and revenue in the grey. The difference between gross sales and revenue, effectively in gross sales we include the travel business turnover, whereas in revenue it's just the commission we earn on that turnover that's shown, and that's why you've got a difference there. But I think what you can see there in terms of the orange bar is that impact in 2020 of the pandemic and how that was affected in terms of that downturn from 2019, and that's continued into 2021, and that is primarily, as I said, as a result of the travel business, but also that reduction in the first half of this year, year on year, in the food business. And when we look at how that impacts on profitability, firstly, it's pleasing to report that we have made a positive contribution in the first half of this year. The orange bar is profit before significant items, and the grey bars are profit after significant items. So you can see in terms of before significant items, profit last year was 7.1 million in the first half, and that was down to 5.4 million in the first half of this year. Before significant items, it's up at 4.6 million from 3.6 million the year before. And I think it's important to understand that movement in profitability year on year, and this chart seeks to illustrate that. So on the left-hand side, the orange bar is last year's profitability in the first half, and on the right-hand side, this year's profitability. And what you can see there in terms of that green bar and the reduction is that that's entirely down to that sales reduction in the food business, as well as the fact that in the food business in the first half of last year, we enjoyed the rates holiday that businesses were offered as part of the government initiatives. So when you then look at the other areas, you can see that actually we've seen improvements in terms of the impact on profitability across travel, healthcare, childcare, slight downturn in funeral and utilities, and then some savings in our support groups. So as I said, that the story in the first half really is about what was going on in the first half of last year, and particularly in terms of across our food business. But as you know, we measure more than just the financial numbers, and the measures, the non-financial measures, are as important to us as a cooperative business, and we do this through our steering wheel. We like to look at this across the different measures. You can get more information on this in the full half-year report if you look at it online. But just to sort of pick up on some of the thumbs downs, and there's not too many of them, I'm pleased to say, but first one, supporting our communities. This is really about volunteering, and again, this is about what was going on in the first half of last year. So the first half of last year, we had a lot of people volunteering, colleagues and indeed some of you members, in terms of delivering food to the more vulnerable of our community. And whilst we've continued to do that in the first half of this year, it's not been to the same extent as last year. So that's affected that number. The CLI number, which is the customer loyalty, is absolutely down to the fact that we've changed the way we measure it. So in the past, we measured a customer loyalty index. Now we measure a customer satisfaction rating. So they're different measures, and that's why the numbers in the purest sense are different and down year on year. In terms of handling complaints, that's because we added the utilities business into that area this year, and it's one area where people do often complain about, understandings on bills and things, and so that can affect that number. It's not a significant change, but it is down to that utilities inclusion. And finally, working safely, and this is about the number of accidents across our businesses. It's not a significant increase, but of course that includes our childcare nurseries. As you can imagine, with young children falling over and bumping heads and things, that can contribute quite a bit to that number. And in the first half of last year, 2/3 of our nurseries were closed for a good period of time, so it's not a surprise that in the first half of this year we've seen a few more accidents than in the first half of last year. So that explains those elements on the steering wheel. But as I said, overall, a positive position, and we're really pleased with many of the initiatives that are undertaken and where we're seeing positive signs, particularly in areas such as reducing waste, saving energy, and in innovation. So obviously we'll update at the AGM in terms of the final position on the steering wheel. Now, I said I'd talk about a couple of the businesses in a bit more detail, and I'll start with travel, because our travel business has been impacted more than any of our other businesses since the start of the pandemic, and that won't be a surprise to you. I'm sure your own plans have been affected both this year and probably last year as well. So, as I said, all of our branches were closed until the 12th of April this year, at the point they reopened. But even at the point they reopened, because of the restrictions on travel and the confusion around the traffic light system that was introduced and started off as green, amber, green, and then we had amber plus, and obviously constant changes to it, and that really did affect consumer confidence in terms of travel. And I think that's illustrated by the fact that we've just seen the economic results for August, where the economy grew by 0.4%, and much of that was put down to the fact that people went on staycations as a holiday in the UK. So you can see that impact overall. So our gross sales at 56 million is about a quarter of what we'd have expected in that period of time. We've also issued refunds to customers totaling 41 million pounds, and that's been very important to make sure that as we receive money back from tour operators and airlines, we pay it back to our customers. I think the way we've gone about running our travel business has been recognised by the Consumer Champion Which, and we've been rated green in terms of our policies. We've also tried to help customers. We've provided through our healthcare business testing kits of the things that are required for people to travel. In fact, we sold 1.8 million pounds worth of testing kits this year, and that's about 53,000. And you may have read some pretty bad stories about profiteering on testing kits. So I'd reassure you as members that people that booked through our travel business were provided with those test kits at the cost price to us, and so we certainly weren't profiteering out of them, but really more about helping members to enjoy a holiday. And finally, I would just like to pay tribute to our colleagues in our travel business. They worked very, very hard the last 18 months, helping our customers through very difficult times, and a number of them have volunteered to redeploy into other parts of our business when the business slowed down, or take a cut in hours, and they've really worked with us to ensure that we keep the business as profitable as possible during very difficult times. I also want to now just cover the funeral business, and the board announced in June an intention to enter into an agreement with Central England Co-op to transfer the majority of our funeral homes to them. This is a strategic decision. It was made as part of a long-term view in terms of where we feel it's best to invest as an organisation into the businesses that we operate. And I think what's crucial about that is that this arrangement has now been approved by the Competition and Markets Authority, which includes, as I said, the majority of homes going to Central England Co-op, and then some to Southern Co-op as well, and one to Heart of England, means that 95% of the volume we do through the funeral business will be retained within the cooperative movement. And so our members, our communities will still be able to access, in the main, cooperative funeral services through this arrangement, but it means that we as an organisation can continue to invest in our other businesses, which in many cases are unique to the co-op movement, because obviously, in childcare, nurseries and utilities, increasingly in travel, we're the only cooperative operating in those areas, so it allows us to continue to invest and strengthen those businesses for the long term. And again, I would just like to say thank you to our colleagues working in our funeral business. I mean, they've worked with us throughout this period of uncertainty. They've been first class. They've continued to give the very best service as only they can, and we are really, really grateful to them for their dedication and their understanding through this period. And I'm delighted that the vast majority of them will be transferring with the business and will have a secure future with the societies they're transferring to. We do have some homes that are not transferring, and we are working hard to try and find new owners for those, but that is proving difficult. They're very small homes, very low volumes, and so we'll continue to work through that. And also our masonry operation will be closing, as that's not part of the transfer. So in addition to dealing with some of these issues that we've had, we have been busy also looking to the longer term and the future, and we've been developing new services at a pace, things such as home delivery, trials in the food business, click and collect, which will allow us to bring more of our community stores access to locally sourced products through a future arrangement where we hope to be able to finalise that next year. And we've been working hard to develop new partnerships in areas such as healthcare, but also things such as travel pop-ups. So we feel that there are many of our locations, particularly our food stores, that would benefit from time to time having access to some of our travel services that they don't have today. So a lot going on in terms of development of new services, and you'll hear a lot more about this at the AGM next year, but we're really, really excited about some of the things that are underway in these areas right now. And we're continuing to invest in new sites. We've been really pleased to open 6 new food stores in the first half of this year, and we've got more to come. Those stores are all performing really, really well, and that's obviously really important for the long-term future of the society. But in addition to those that we've already opened, we have 20 confirmed sites that have been approved by the board and are in the pipeline, many of which will come on stream next year. And in addition to that, we have about another 60 that we're working on that are at some stage of development as part of the work there. So really, really important growth area for us, and a lot going on. And also in our childcare nursery business, we're also doing a lot of work to grow that part of the operations. We have opened a new site at Cheltenham just last month, and we have another one planned to open later this year in Bristol. And in addition to that, we're working on 8 new confirmed sites, most of which will come on stream again next year. And in addition to that, there's another 26 sites that have got some work to go, but you can see across our trading areas. So these are really exciting developments, and I think demonstrate the commitment the board have made on behalf of you, our members, to continue to invest in the society and to grow it for the long term, particularly in those areas that we're becoming very well known for. And as I said, the childcare nurseries and Little Pioneers operations are first-class operations. I'm really pleased that we have not stopped investing in our communities throughout the last 18 months. Our community team have worked really hard with our operations teams to continue to do what's right in our communities. Too numerous to mention all of them, but actually some of the things I would highlight. Firstly, we opened a dedicated community space with some of our charity partners, so in Long Levens, where we're working with the Cotswold Riding for Disabled, and we've given them space in the store to sell items in order to fund that charity, which I think is a great initiative. We've also opened an enterprise hub in Cowley in Oxford, first of its kind, and this helps new businesses to start up. It also helps existing businesses to look at how they're operating. These are small businesses, obviously. We've done that in conjunction with our partners Aspire, but we're also working with them to give people the chance to have work experience in the store there. And these people may be homeless, they may be refugees, they may have just not been able to work for some time. So, you know, it's a really important initiative to help people back onto their feet and give them the work experience they need to enable them to go on and find jobs on a permanent basis. And so some really good work going on with our community partners. And as I said earlier, we continue to make those home deliveries. I think the film said we'd made 133,000. That's now over 140,000. So you can see that continues at a pace. And finally, I just want to talk about an ongoing focus on membership. You, our members. I think we've talked about this before. You know, you are at the heart of this business. You own it, and it's really important that we continue to develop the ways that in which we engage with you. Many of you may have joined the Your Co-op Conversations, which is a brilliant two-way interactive session or sessions that allow you to tell us about what you're thinking about around certain subject matters, give us your views on things. We've done a lot more work in terms of developing our research panels as well to continue to understand your thinking of things, your views across a wide range of subject matters as well. So we're going to continue to develop those opportunities, continue to talking to you. I think the Young Co-operators Network, which has started a few years ago, is going from strength to strength, and it was great to see so many of those individuals, the young people that have worked through that, standing for the Member Engagement Committee. And so a lot of activity in terms of engaging members, and that includes introducing new technologies. Thank you to those of you that have been involved since August last year in the pilot for a new members app, which I know has been interesting as part of that pilot, and we've worked really hard to get the technology right, and we've listened to you, taken feedback. Some of the things you were talking about were, that when you went into a store and opened the app, you couldn't always get a mobile signal, and that made it difficult to use in the store. I'm really pleased to say that as of tomorrow, every one of our stores will have Wi-Fi enabled for you as our members, which means that you can use the app using our Wi-Fi, and once you've logged on for the first time, it'll automatically click you on whenever you visit any of our stores thereafter. So these are the sorts of things we've learned from the pilot. The other thing you said to us, it's not just all about deals and offers, it should be more about information, more about what's going on in our communities. So again, a lot of work has gone into doing that. So the app launches on the 19th of October, the new app, and you'll have the chance to download that. And it really will be membership in the palm of your hand, and hopefully you'll see we've made those improvements thanks to your feedback and the commitment you made as part of that pilot. So a really exciting change for us. We think it will give new members an opportunity to engage with us, and perhaps some of the younger members as well, in a way they haven't been able to in the past. But it is not replacing any of the existing stuff. It is a new layering above it. So I'm really pleased to say that if you use your card today and you want to carry on using your card, you still can. If you get vouchers through the post, you still be able to. So we're not replacing any of the existing ways that we communicate with you. It's really about an enhancement and giving you new options to do it. So that's an update in terms of the membership. And I think it's also important, just in terms of looking back, is that we also just look forward a little bit. And you will be as aware as I am about the challenges that we're all facing now in terms of supply chains and the labour market and getting goods and services. And we're no different to that, and we're certainly not immune to the effects of it. And we're working very hard as a board and the executive team, along with our colleagues, to really look ahead and work out how we ensure that we continue to deliver the services to the best we can. And I know there's been some problems with availability in our food stores because of the well-documented driver shortages and things, and we are working hard with that. So, there are some difficult times ahead in that respect, and I think as we come out of the pandemic and economies start to readjust, we've got to be ready for that and work hard to ensure that we're doing the very best job for your members. But I'm very confident that we have the right people, we have the right thinking in order to deliver that, and I'm looking forward to talking to you at the AGM in May next year, hopefully in person, at which point we'll be able to give you an update, and hopefully we'll be out of the pandemic and things will be moving forwards in a positive light. So thank you for listening, and Thank you.
Thank you, Phil. You've covered a lot of ground, and I'm sure members will have found it really helpful in gaining an understanding of the Society's performance during the half year. From the board's perspective, I'd echo what you've said. We really owe our colleagues a debt of gratitude for their commitment and for the spirit they've shown during what has been a very tough period for them and for the Society. Don't forget about the yellow speech bubble at the bottom of your screen, as we now have the opportunity for questions from members on the half year. So from either the video, Phil's update, or indeed the formal half-yearly report, please ask your questions. We'll be asking you, by the way, to adopt the report later in the meeting. We'll do our best to cover off as many of the questions as we can in the time we have, and we have the opportunity for general questions later in the meeting, so it would be very helpful if you could keep your questions for now to matters from the update and our half-yearly report. So we have a question from Arledge. It's will our Society's travel business offer insurance products in the future? Phil?
Yes, well, in fact, it's a good question. It already does. I think probably the take on that is that we're probably not doing a good enough job to let people know. But we do have a travel insurance policy as part of our travel business, and so you can get. If you're talking about travel insurance, then yes, that's available through our travel business. We probably need to do a slightly better job in making sure people are aware of that. So, thank you.
Great. Well, the next question we have is, where will the first member-funded solar panels be installed? So this is a new initiative we're working on. Phil?
Yes. So actually, we have solar panels on Bolton on the Water, on the roof of Bolton on the Water, and that's the unit where we're looking to give members the opportunity to acquire that as part of a community energy proposition. So they're already installed. They were installed when the store was built. But in terms of where we're looking to install them as part of the member plan, we're working on a number of options at the moment, a number of sites. It is subject to, obviously community engagement and making sure the right sites. But one of the sites that we're looking at is Morton and the Marsh, there in the Cotswolds. So hopefully we'll give some more detail on this at the AGM, but there's a number of sites we're looking at the moment too. This is a great initiative, and I think members probably interested in understanding more about this, and we'll make sure that we include more about that at the AGM.
Great. Well, the next question we have, a very important one. It's good to see the first pay gap analysis. What is the plan to address the ethnicity pay gap?
And I think the plan starts with reporting on it. And so, as I said in the presentation, this is the first time we've reported on the ethnicity pay gap. And so it's only by reporting on it and then breaking it down into detail to understand where, is that gap across all of our businesses? Does it exist in certain areas? And I think when you do that analysis, you can see that, for example, our childcare business has a greater cross-section of ethnicity within its colleague base than perhaps our travel business does, for example. And so we need to do more in our travel business to encourage people from minority ethnic backgrounds into the business, and that will help to address the pay gap. And so it's about making sure that, first and foremost, we do the analysis, we understand where the gaps are in detail, that we then work harder to encourage people from a cross-section of ethnic backgrounds to work for the society and apply to the society and understand why they haven't been in the past. And what we're looking to do is to make sure that in the future that our employee base really does represent the communities in which we're trading, so that the ethnicity within our employee base represents the ethnic mix within the areas that we're trading, and that's important in terms of addressing that pay gap, because then it'll encourage people to come into the organisation and progress through it. And also, as I mentioned in the presentation, training sessions such as Let's Talk About Race really does help that, because it helps people to understand some of the barriers that have perhaps existed for people to join the organisation in the past, and not just join the organisation but progress through it. And that's the thing that will really change the pay gap is giving people those incentives to progress through it from the minority ethnic backgrounds.
Thank you, Phil. We have another question. How does food profitability stack up against other food retailers?
It depends on the other food retail. I mean, obviously within food retail, you've got some very, very big businesses. Tesco, obviously the largest, but the big four supermarket chains, account for over 80% of the market, so they have a significant buying power. We are fortunate that we're part of the national cooperative buying setup as far as food is concerned, and so we, whilst it's not as big as the big four multiples, it's still a big buying power, and therefore we're able to enjoy the benefits and terms associated with a multi-billion-pound buying operation rather than just a £500 million buying operation. So, it stacks up well in terms of, I would say, retailers of a similar size to us. But clearly, we're unable to buy at the same terms as the very big operators are, because it's a volume game. But I think we do pretty well when you look across the sort of medium tier retailers and where we can compare co-op to.
Thank you. A question about energy now. Has there been any impact on the society from the collapse of various energy companies? Something very topical, of course. We've read about another two that I think went yesterday.
That's right, yeah. No, very important that the board's decision back in 2019 to enter into the partnership with Octopus and exit the end-to-end operation of an energy company means that our relationship puts all the risk with Octopus. So, we're not having to buy energy, we're not having to hedge that energy or take any of the risks around that. And so the price fluctuation in terms of the wholesale price doesn't affect us because the way that our revenues work is very much on a loyalty payment from Octopus and then a commission for new customers. So we're not affected by what's going on in the marketplace in terms of our profitability. Where it is affecting us is that, as you've probably seen, everyone's being told to stay put and not to switch, because if you're on a standard variable tariff, switching would mean going on to a higher fixed rate tariff, and so advice to everyone right now is not to switch, and therefore what we're not doing at the moment is bringing on new customers. So it's slowed down our customer acquisition, but not that it will significantly affect our numbers. But I think more importantly, we're not exposed to the volatility of the wholesale market, and Octopus have done a very, very good job in terms of hedging their forward requirements on energy. So they are a very, very important partner for us, and they've done a good job in terms of the way they've gone about running the business, and so they're in a strong position.
Thank you. Well, a question on executive pay now. If total profitability is falling, have the executive team reduced their pay for the half year accordingly? Well, I think just to start off with, I'd like to say that when the pandemic started, our executive team took a very significant pay cut in order to try and show common cause with everyone else in the society with everything we were going through. And the other thing I would say, and this is very much something the board has wanted to see, is that we have seen a reduction in the top to bottom pay ratio in the society. So I think we are moving in the right direction on this here. Now, in relation to profitability for the half year, I'm not on the remuneration committee, so I think I'll need to defer to Phil to give the detail on this. But I believe that part of the bonus payment, both the annual payments and indeed long-term payments, is related to profitability. So obviously that would have had an impact that would flow through. But Phil, maybe you can give a bit more detail on that.
Yeah, that's absolutely right. Vivian, you said last year the executive team voluntarily took a pay cut, which was significant, and that was reported at the AGM. The executive remuneration is made up of basic pay and incentive payments, as you said, and of course, if the profitability is down and doesn't hit the numbers that the board have signed off, then the executive team aren't going to receive the bonus incentive, and that's been the case for the last 2 years because of the impact of the pandemic. And so in that respect, yes, the pay is reduced because they're not receiving the incentive payments which are aligned to the society hitting certain levels of profitability.
Thank you. So another question now about energy. Can you give greater detail about what remains of cooperative energy following the transfer of engagements to Octopus? Is there another significant problem with the latest hike in gas prices, or is that a hit for Octopus?
Yeah, as I was saying, it's certainly the risk is with Octopus because the relationship we have with them is twofold. In one respect, the customers that were previously with cooperative energy transferred to Octopus and became their customers, but through a partnership with us, we receive an annual loyalty in respect to those customers for staying with Octopus under the Co-op Energy Partnership, and we receive a commission for any new customers joining that partnership, but we're not responsible for the purchasing of the energy supplied, and therefore there is no risk to us in that respect. And we also have a joint venture with Octopus, which is a joint venture around community energy, where we each own 50% of that venture, and we invest in working with local communities to set up community energy assets for the supply of renewable solar or wind or hydro power. And that's been a really successful move. In fact, we've doubled the number of power purchase agreements since that relationship started with Octopus. We have enough energy now coming through those community energy operations to supply around 55,000 homes, and the plan is to do a lot more of that with Octopus. So we are somewhat immune, as I was saying earlier, from the effects of what's going on in the market in terms of us profitability-wise, but Octopus are in a very strong position, and you may have read that they recently received a $600 million investment from the Al Gore Fund as part of their investment into renewables. So, whilst they are clearly being affected by what's going on in the market, they are a strong organisation, and the board were very careful about who we partnered with, and I think it's testament to that process the board went through that we have partnered with an organisation that shares our values and thinking as Octopus do, and is a strong organisation, and that's why it was the right decision at the time.
Mm-hmm. And I have to say, I think in the current energy market, it would be extremely difficult if we were still in the position we were in, running the energy business in the way we did before. So it certainly makes the decision feel like the right one with hindsight. Another question now about food. Is Bourton-on-the-Water, a store we opened a few years ago, still performing strongly? Has any capital deployed for this opportunity since been freed up to deploy elsewhere? I'm not quite sure what that means, but anyway, if it was it was a major society-wide bet with the dregs of our available cash at the time. I'm not sure I'd quite frame it like that, because I think it was a project we planned to do for a number of years, and I think we were very confident in it, actually. And as far as I know, it is still performing well. But Phil, do give us the detail.
Yeah, so it's performing very well. It's certainly beyond its expectations that we had for it at the time, so it's done better than we had originally thought it would, which is great news. And it's a great store, doing a good job in the community. It had some impact last year in the pandemic, particularly, as you probably know if you know the area. A lot of people visit Bourton-on-the-Water. It's a lovely place to go, and so we do get a fair amount of trade from day trippers. And of course, last summer, people weren't able to do that. So last year we saw a bit of a downturn, but actually now things are back to normal, and it's a very successful store for us, a very profitable store, and certainly justifies the capital investment. I mean, there is a point that the site that was where the old store was is still owned by the society, which is something we will deal with over a matter of time, because clearly that site is a site that's no longer used for anything, and therefore there's an opportunity to release some capital at some point from that site. But in terms of the food store, the new one, yes, doing very well.
Good. Now, a question again about electricity and gas prices. It looks like the society faces higher electricity and gas prices for business use in 2 years' time. Are we in a better place than some competitors to bear this due to our environmental efforts?
Yeah, so in terms of energy prices that we pay as a business, we're fortunate that our energy is hedged into next year, so we're not being affected by the wholesale price increases at the moment that some other businesses have been affected by, but we shouldn't be complacent about that. And clearly, whilst we are forward hedged, there'll be a point in time when we'll be back into the market to secure a new position as far as the supply of commercial energy, and therefore a lot of the work that's going on at the moment now is to ensure that we mitigate any potential cost increases through investment in energy efficiency. So we are planning next year to replace all of the lighting across our food estate with LED lighting, to install more refrigeration or new refrigeration into our stores that is even more energy efficient than in the past. So we are going to be diverting capital next year into energy efficiency initiatives to sort of mitigate some of that future cost price increases, as you say. And so I think they're important things for the society to do. But fortunately, at this time, we're not being affected by it because we are hedged in terms of we forward bought the energy for our businesses into next year.
A question now on telecoms. After the phone co-op transferred a couple of years ago, you don't break down the figures in that business. How is the phone business performing, and what do you think the long-term future holds to make this business a success?
So it's performing okay. I think we think it could do more. We've been somewhat restricted in terms of our ability to take on new customers, particularly in the business sectors, because of what's been going on with the pandemic. And of course, in many cases, the sort of services we were supplying have been reduced in demand in terms of business to business. On the domestic front, we've held the numbers broadly where they were. We feel we can do more. We've recently introduced some new initiatives around green broadband, green fibre. We're also doing work with Fairphone to improve the proposition there, which has been a successful partnership. We'll be launching a new partnership with DoroCare next year, which is another service that we're implementing. So there's a range of new services coming on stream next year as part of that operation to improve it. And also, one of the important things about the members app is that our research tells us still a lot of our members are unaware of the services through the telecoms operation. So, just doing more to make sure people are aware of those services and the products will help to grow the business. So, that's a big part of Lizzie Heron, who's our Chief Operating Officer for the utilities business, her work for next year. So, yeah, we're happy with it, but there's more to be done, that's certain.
I know we've used up the allocated time for this, but there is one last question which I will take because it's a very important one, which is how are you progressing with encouraging more members to trade with mid-counties as a % of overall trade or turnover?
Lots of things going on. I could probably talk about that for an hour, but
Not an hour.
No. It's the right question because we have listed around 700,000 members, of which about half of that number regularly trade with us. But the key point is that the less than 10% of those members trade with more than one business. And so we have been developing capabilities in terms of digital services. We are improving our digital online proposition for travel. We've done a lot of work around healthcare. We have the utility services we've just been talking about. We are opening new food stores in locations where perhaps members live but don't have access to food stores. So there's a lot of work to go on to give members better access to our products and services. So that's the first part of that plan. And then it's about making sure that we have your permission to talk to you about those services because of the rules around GDPR and the way you need to go about that. And then, as I said earlier, the members app, I think, will help to encourage people because it'll give you easier access to services and make you aware of the products. And the final element to that is through reward, by making sure that, as members, the more you trade with us, the better you do. And that's the principle of cooperation, and it's important that we follow through that in terms of the services. So lots of things, and we have a Chief Marketing Officer, Alison Bain, who this is her mission, and she's got some great plans in respect of what we're going to be doing in the future, but already doing as well.
Fantastic, thank you. Well, I'm sure you'd agree that we've had some really great questions coming from members. Thank you very much for those, and do please keep the questions coming in because we'll be able to take more general questions later. We can move on now to the formal part of the agenda, where we have some items that require your approval. If you have any questions on these formal items, then please type away and we'll cover off these questions before we come to vote. First, we have the minutes from the half-year and special meetings held in October last year. You'll have seen these in the meeting papers on the website and hopefully have had the chance to review them. Note that we've also uploaded for information the draft minutes from the AGM and the special meeting back in May, as no doubt some of you will have watched this. We'll be formally approving these minutes at the AGM next May, but they might prompt a question you could raise later in the question and answer session. We'll come to the approval of the minutes shortly. Our next formal item is the share of profits proposal, and Peter Dubois, our Group Chief Financial Officer, is going to present the details to you.
Good evening, members. It's my pleasure to present your board's recommended share of profits distribution for members' trade up until January 2021. So for members that were present at the AGM earlier in the year, you may recall that the board did not feel it appropriate to propose a share of profits payment at that time. This was due to the ongoing uncertainty of the pandemic at that time. A similar approach, you may recall, was adopted in 2020 as well. However, with the passage of a few more months, the board now feels that it is in a clearer position to make a formal proposal for members to consider and vote on at towards the end of this meeting. And I'm delighted to be able to present the details to you now. So the proposed share of profit distribution, and this will be on points that have been earned by members for their trade with the Society up until January 2021, is half a penny a point. And this will be a total of £1.1 million. As we've already heard this evening, the engagement with members is moving towards more of a digital proposition. And it will be a similar with the distribution. So it will be made following a digital first approach, but applying some additional enhancements that make it easier for members to redeem, including a focus on using member data to tailor the distribution to a method that is most convenient for you, the members, on a personal basis. I'm sure your members will also appreciate the return to the normal timing of the distribution. So the distribution will occur just before Christmas, as has historically been the case and has been appreciated by members over many years. As the Chair noted, there will be the opportunity for questions and then voting on the distribution later on. But thank you very much for your attention. Now I'd like to hand back to the Chair.
Thank you, Peter. And finally, we come to the special meeting where your board wishes to propose a rule change to members. And I'm going to hand over to Edward Parker, the Society's Secretary, who will briefly explain the change. Edward.
Thanks, Vivian. Good evening, members. As Vivian's just mentioned, we've got a special meeting now, a formal special meeting, just as the board wishes to propose a rule change for your consideration. We sent a briefing note out about this in the meeting papers, and for the sake of ease and consistency, I'll read from that briefing note just to explain the rationale behind the change. It won't take too long, so here we go. Section 12 in the Society's rules sets out a process that allows the Society to cancel the membership of those who have lost touch with the Society, perhaps, for example, because they have moved away or maybe because they've stopped trading with the Society. The process allows us, after taking certain steps, to cancel the share accounts of such members and to transfer the balances in the accounts to, and I'll quote directly from the rules here, to a fund set up to fulfil the Society's community, cooperative and social goals. When this rule was introduced in 2010, the Society set up the Mid-Counties Cooperative Community Fund specifically for this purpose, and every year since then, the Society has undertaken an exercise to update its register of members and transfer any cancelled share account balances into this fund. The fund's been a great success. Since it was set up, it's made grants totalling over £1.7 million to over 1,200 local community groups. And it's also been able to establish over the last 10 years a sufficiently firm financial footing such that it can now continue its grant-giving programme without the need for further contributions. Given this second point, the board now believes there's scope to broaden the range of options it has to use the money sourced from cancelled share balances. In particular, the board believes there's an opportunity to allow the Society to allocate cancelled share balances to projects or initiatives that help further the Society's sustainability agenda. However, in order to do this requires a rule change, given, as noted earlier, it's only possible to allocate cancelled share balances to the community fund. And the proposed rule change provides for this, and you'll see it here on your screen now, so it's the words underlined that the board wishes to add into the rule. So you just have a chance to digest that. And then just quickly, in terms of our sustainability work, because sustainability is certainly a very broad church, but we have in the Society 6 key areas that we focus on, so the environment, energy consumption and production, financial viability and independence, education, community infrastructure and health and well-being. So it's additional projects and initiatives in those areas that the rule change will allow to be funded using members' cancelled share balances. Thank you.
Thank you very much, Edward. Now, in a minute, we'll be asking you to vote on all of the proposals we've just been talking about. But before we come to voting, let's just check if we have any questions on the formal items. So now's an opportunity, and I'll give you a minute to type in any questions you have on any of the formal items we've just been discussing. Well, it doesn't look like we have any questions coming in, so we'll move straight to the vote. We've got a quick practice session first to bring everyone up to speed on how the voting system works, and then we'll move to the formal votes. Now, just as a reminder, only those who've been a member for at least 6 months are eligible to vote, so a small number of you won't be voting today and can now have a quiet moment. I hope all of you who can vote do take the opportunity to do so. Having your say as a member is such a fundamental part of what our cooperative society, and in fact any cooperative society, is all about, that we always hope members will feel encouraged to do so by voting. We don't know how you vote, which is really important, so please don't hold back. And if you have a technical issue with the system or any problem, just use the online web chat for support and they'll be able to help you. Just for further assistance, the vote is being, further assurance, the vote is being independently managed by Civica Election Services. And just to reiterate the point I mentioned earlier, if the voting technology fails us, we will formally adjourn the meeting to our backup date of the 20th of October, and in that eventuality, we will send you all the information on the 19th, the day before the meeting. But let's hope that doesn't happen. And with that covered, we can move right on to the vote itself. You'll see the question on your screen. We're asking, and this is a test vote, a practice vote. You'll see the question on your screen. Have you attended a Your Co-op conversation? Now, these are online events we've introduced recently to allow members to discuss items that matter to the society. Here's the voting slide. You should have received a notification to let you know that voting is now open, so simply click your answer, and you can change your answer right up until the voting closes. So that's now open, and you've got 30 seconds to cast your vote. If you've finished voting, you might want to go to our travel website and book a holiday for next year, because as we come out of the pandemic, it's probably a good time to do that, and there are plenty of good deals available. I'm going to close the vote in 5, 4, 3, 2, 1 seconds. Closed. Well, hopefully that's been straightforward. If, as I say, you have any problems, please get in touch through the speech bubble we mentioned earlier. I'm pleased to say that the practice vote has worked successfully, so let's now move on to the formal voting. The Secretary, Edward, will confirm the formal outcomes at the end of the voting session. So first of all, the vote on the half-yearly report. On behalf of the Board, I'd like to ask the meeting to receive and adopt the half-yearly report to the 24th of July 2021, which has been approved by the Board. And we can vote now. We have 30 seconds. Well, if you've finished voting, you could go to yourcoopbroadband.coop and sign up for a great telecoms deal. Because as Phil said, lots of our members haven't done that yet. So if that's you, you know what to do. 3, 2, 1, and that's closed. Thank you. We move on now to the meeting minutes. And we can now move to formally approve the minutes from the last year's half-year and special meetings. On behalf of the Board, I ask the meeting to approve the minutes from the 2020 half-year and special meetings. Don't forget you can change your vote right up until the last second, although I imagine you'll probably know what you want to do first time round. Here's the slide now. You have 30 seconds. If you haven't visited our healthcare site, why not do so? Because even though we don't have a high street presence, we can buy a large range of pharmacy items online, and you can get your prescriptions delivered to your house. We'll be closing the vote in 6, 5, 4, 3, 2, 1. That's closed. Thank you. And now a vote on the share of profits proposal. I formally propose a share of profits distribution of £1.1 million, which equates to 0.5 pence per point. And we can vote now with 30 seconds. And you can change your vote at any point and vote not to receive a 0.5 pence per point if you want to, but I expect you'll want to receive it. Okay, we'll be closing that in 4, 3, 2, 1 seconds. That's closed. Thank you. And finally, the last vote is on the rule change, the change to Rule 12.6c. And if again I could ask you to please cast your vote. Here's the slide. You can cast your vote now. And if you've finished voting, why not pop down to your local food store and buy some fair trade wine. There are some excellent wines, and you make a real difference to people's lives all over the world when you do that. Okay, we'll be closing the vote shortly in 5, 4, 3, 2, 1. That's closed. Thank you. And that's all the formal voting done. I'll now ask the Society's Secretary, Edward Parker, to confirm the results from our recent elections, followed by the results of the voting at this meeting. Over to you, Edward.
Thanks, Vivian. Just the results for the voting just now will probably take a little time to come through. You should probably move straight to Q&A after I've announced the voting results. So just to say, you all know, members, that we had our board and MEC member engagement committee elections recently. They closed on the 4th of October, and we received the results on the 5th. So just to cover the board elections first, there were 5 vacancies and 13 members put themselves forward. Here are the results. So congratulations to Helen Wiseman, Ellie Boyle and Matt Lane, who are returning directors, having stood for re-election again. And well done to Evelyn Godfrey and Nick Milton, new directors for the board. And our commiserations to the other candidates who put themselves forward for election. Here they are. On the member engagement committee election, it was a little more complicated than the board election this year because we introduced our new young member constituency, so we had 3 vacancies for that, and we also had 2 casual vacancies to fill as well. This made the election mildly complex to work out, but here we go. Here are the results. So well done to Imogen Head, Emily Stafford, Julia Farrell, Ben Johnson, Harvey Griffiths, Patrick Gray and James McClelland. So they're voted on for the terms of office you can see there. And again, commiserations to the candidates who were unsuccessful, who put themselves forward, but thank you for doing so. And just to let you know that we had over 35,000 members vote, which was a turnout of about 8.36%. Well, not about, it was 8.36%, which is about average for the last elections over the last number of years.
Thank you very much, Edward. We do have a short post-election survey which will be going out to members at the end of this week, so we'd really encourage you to complete the survey so we can keep improving on the annual elections process. I'd like to offer my commiserations to the unsuccessful candidates and my thanks to all those who put themselves forward. It's good to see such an active democracy, and I think it's something we in Mid-Counties Co-op are really proud of. I'd also like to offer my personal thanks to Steve Alsop and Kathy Peterson, who are standing down from the board, for their hard work and contribution to the Society over the last few years. Steve Alsop served as President and Vice President of the Oxford, Swindon and Gloucester Co-op prior to the merger that formed Mid-Counties, and rejoined us 6 years ago after a period of absence from the board. He's also stepping down as Chair of the Pension Trustee Board. Kathy joined us more recently and has brought her valuable finance skills to the board, and we shall miss both of them. So thank you very much, Kathy and Steve. Are we ready to confirm the voting results?
No,
yeah? Okay, so in that case, I think we shall take some questions, and we've got plenty of time for questions, so do keep them coming in. And we have a question here. It was great to visit the Mid-Counties Swindon Old Town store in July to celebrate the launch of a partnership between Mid-Counties Food and Revolver Co-op. I had the privilege to meet many experienced cooperators, the Mayor of Swindon and others. May I ask why this has not been promoted more as an example of Principle 6 in action? Well, that's a very valid question. I remember actually being present at the opening of the Swindon Old Town store in 1986, I think it was. So it's a store that's close to my heart, and as is Principle 6. So, Phil, I don't know if you can help us with that.
Yes, I mean, firstly, for perhaps members that aren't familiar with the Swindon Old Town store, the partnership with Revolver is through the opening of a coffee shop. So we had a coffee shop in the Swindon Old Town store, and that's been refurbished in partnership with Revolver, who we've worked with for many years, and a great cooperative business who've supplied us with fair trade coffee for many years as part of our food operation. And so this was the first partnership in terms of actually opening a coffee shop together. I think it's been a long time coming. It's been delayed by the pandemic and some of the uncertainties, and we've wanted to be very careful about making sure that once it's open, it stays open and we're not closed down again because of lockdowns and things. And so, and making sure that the colleagues are trained to the best of their abilities. But I think it's a fair point. We certainly have no reason not to promote it because we're very proud of it and we have a good relationship with Revolver, and so it's certainly something I'll pick up with Rupert Newman, our Chief Retail Officer, to see what more we can do to just promote the offer. And if you do get a chance to visit Swindon, please do pop in, and it's a great initiative, and hopefully there's more to come.
Thank you. So we have a question about availability. I think, Phil, you touched on this earlier. With current availability issues in stores, are we confident that we can have a profitable Christmas with stock available?
There's a lot of work going on to plan for Christmas. I mean, we give our commitments in terms of stock, the special ranges of stock for Christmas well in advance. In fact, we've already committed for Easter in terms of stock. So, the commitments are made well in advance, and therefore, you hope that the supplier base and supply chain are producing to those commitments. The challenges that everyone's seeing at the moment, clearly around logistics, is a combination of a lack of drivers, as you know, and you probably know from the petrol shortages and the problems. So there's a challenge around the lack of drivers, and then there's a challenge in terms of the suppliers themselves and their ability to produce goods and supply them into the distribution centres, and then further problems with some of the distribution centres in terms of making sure there's enough people. So there's lots of moving parts of this, and it's affecting businesses and industries all over, not just the UK but the world, as we come out of the pandemic. So I'm not going to sit here and suggest that it's a walk in the park, or that it's not something we're concerned by, because it is something we're concerned by, and we're spending a lot of time in the planning to ensure we bring allocations of stock forward, so we put stock into the stores earlier, which means holding more stock in order to be ready for Christmas, which is fine obviously on the ambient products, but not so easy on fresh products, because clearly they are supplied just in time, as you can imagine. And so we've put a lot of focus in terms of making sure that our fresh ranges are maintained through that period. So I think we are doing as much as we can, and nationally, the national setup are doing as much as they can. It will be a challenge for all retailers going into Christmas, but I am confident that we will be able to provide our members and customers with the range of products they would expect, and that our availability will be held. But there will undoubtedly be some blips. I would just caveat that with one of the challenges that we do face is how these things are reported in the press, and the unintended consequences of the way these things are reported. I mean, that's exactly what happened with the fuel situation, because in reality there were very few fuel sites in the UK that were struggling to get supplies, and a comment made by an executive from BP in a government meeting that was not necessarily completely reported accurately afterwards led to panic buying of fuel. So we are mindful that sometimes these matters occur as a result of perhaps reports in the press, and so that's something we need to be wary of. But other than that, yes, we've got a very robust plan in place for the Christmas period, as you would expect us to have.
Thanks, Phil. We have a question from Jenny de Villiers. Good to have a question from you, Jenny. Mid-counties are very proactive and supportive within the international co-op movement, which is welcomed. How do they measure the UN Sustainable Development Goals?
In terms of how do the international cooperative movement measure them, I would be unqualified in terms of trying to answer that because my colleague Peter Westall, who
I think the question means how do we answer it? How do we measure it?
yes, so we certainly align to the UN Social Development Goals, and as part of our sustainability measures, we incorporate those in terms of those measurements that are published as part of our annual report.
I think I can add to that that Cooperatives UK is working on integrating the Sustainable Development Goals into the recommended reporting for cooperative societies. I personally serve on the Cooperatives UK board as a society's nominee and on their Cooperative Performance Committee, which is working on this very point. So we are looking to find ways to integrate that reporting so that we report both on our performance as cooperatives and our performance against the UN Sustainable Development Goals. So thank you for the question. We have a question again. With the wider spread of energy and nursery customers around the country, what, if any, impact is there upon mid-counties as a geographically located society? That's something we talk about quite often, actually, as you can imagine. Phil?
Yeah, and in answering that question, I noticed there was a question also from a phone co-op, a customer that lives in Kent who was asking a similar question, saying, I sort of feel sort of left out now, being in Kent, and should I join the Southern Co-op Society? So the board have recently reviewed the position in terms of locations, because clearly, as the question puts it, we have childcare nurseries, up and down the length and breadth of England. We increasingly have travel operations outside of our core geography, and our food tends to be in our heartlands. We have some infill opportunities, but I think one of the things that we have to do better at is engaging members who live outside of our heartland communities, and many of those will be engaging with us digitally, and therefore we can do more through that digital process. And then I think the other thing is, and we were talking about this just as earlier this week as CEOs, so the CEOs of the independent co-ops and indeed the co-op group, we were talking earlier in this week about how can we work more closely together on community initiatives. So if there's a community initiative in the south of England that Southern Cooperative are leading, how can we inform our members that perhaps are members because they trade with us in some of our online services about that, and how can they get involved in that? And so we have made a commitment to each other that we should find a framework for that, because this is going to increasingly be the case as we develop our businesses digitally and online, and so that's certainly an item on the agenda and something that we will hopefully be talking more about in the future. But it's a big opportunity, and I think as co-operators, and again, Principle 6 suggests that we should be doing that. So I think it's on us to ensure that we do.
Thank you. And I would say to the member who said they felt a bit left out in Kent, who joined through the phone co-op, I was involved in the phone co-op myself, and we certainly had meetings which enabled people to participate remotely at that time by telephone. And I think that was already beginning to carry across into our practice in mid-counties following the transfer of engagements. But of course, the pandemic has forced us to do that. And here we are tonight with you participating from Kent. So I hope you don't feel left out. And I hope that everyone who's a member from wherever they are will feel very much part of this society. Okay, well, we have a question about nurseries. What are the optimal environmental green standards for a new build nursery?
The nursery that's just recently opened in Cheltenham, we had little involvement in terms of its construction specification, because it was actually was built, or was being built, for one of our competitors, and it then became available and we took it on. So we had, in terms of the building itself and the external elements, but we have some very clear requirements in terms of specifications going forwards. And so when we talk to developers about new sites, obviously they've got to adhere to building specification requirements in terms of the legislative requirements, but we want to go further than that. So things such as solar panels on the roofs, rainwater harvesting, using a greater extent of recycled materials in the construction. And so there's a full specification of what we want to do, and quite exciting that we've acquired a site which the board have approved in Bicester, which will be a site that we will build ourselves. It'll be one of the first that we've developed out without a third-party developer, that we'll actually build ourselves, and that will incorporate all of the new technologies and the new environmental specifications that we've been talking about.
Thank you. A question about capital. Question on future capital, access to capital for longer term investment. And the question is, will you seek funding from banks, and what about another member bond in the future?
Yeah, I mean, we obviously have an important relationship with a number of the major banks today. That was an important relationship as we dealt with some of the issues and problems through the energy business, and we've worked very closely with the banks to ensure that we have the headroom in our capital to continue to invest, albeit we've had to be very careful, particularly with the pandemic, and I think that was right. So we have some ambitious plans around growth, and how we fund that growth is an important aspect of the sustainability of that development. And so some of it will be through bank funding, some of it will be through our own capital that we generate, which is important, and I think some of it will also be through member share capital as well. And we're currently looking at a number of different options in terms of the longer term and how we best fund it. And I think it will be a range of areas rather than a single reliance on the major banks, and I think that's important that society is able to access funding from a range of different sources. And and there are there's now funding available linked to green initiatives. So where you're developing, investing capital into environmental initiatives and the standards we were just talking about, the nurseries, then you can access new forms of capital through that, and those are the sorts of things also that we are currently looking at. The arrangements we have in place with our current lenders are due for renegotiation, Peter, August 23. So we've got some time ahead of that, but there's a lot of opportunity to think slightly differently.
Thank you. And just on the share bond point, it's possible to invest in share bond today. There's no.
It is. Yeah.
It's not a question of waiting for a new one to come along. They're available right now, both 1, 2, and 3 year bonds. So
That's right.
Good. I think we have a video question to show.
Chris, I'm a 27-year-old co-operator from Bilston, and my question is, will you have any targeted rewards for young people on your new membership scheme?
Thank you, Chris. Well, that's a really important question, and the new Your Co-op Members app will give members easy access to all elements of membership. Not only will it provide ready access to what's going on and to how to get involved in the society, it will also showcase great member-only offers. These deals will be on popular products and services that appeal to all age ranges, and as we learn more and develop the app further, we'll begin to tailor specific offers to particular member groups, including our younger members. Now, it's time now for questions from those listening this evening, so if anyone has any further general questions to raise, please type away. Oh, and we have some more. What are the plans for a face-to-face AGM in 2022 with a Zoom option for those preferring to remain at home? I think that's very much the way we've been thinking, but Phil, do you want to say
so the plan for the AGM in May 2022 is that it will be a face-to-face AGM, I think held at the National Motorcycle Museum. That's the plan, but clearly we recognise that the technologies that have been developed give us the opportunity to create hybrid environments for meetings going forwards, and so members that want to join via Zoom or online will have the opportunity to do so. But I think that's been the case in the past. I think we, even before the pandemic, members could join and watch the AGM online if they wanted to. I think the difference now is being able to take part in the AGM rather than just watching it, and I think that's the bit that's changed and the bit that we should embrace. But I'm personally looking forward to joining members in person at the AGM and getting the chance to talk over coffee breaks and lunch breaks and things. I think they're all important elements, and also to be able to showcase some of the products and services, and will save you having to keep promoting the services in the middle of voting. But we can actually show some of these products and services to our members. So that's the plan for the AGM anyway.
Good. Question now on packaging. Packaging as a whole seems to be a global issue. Is this an opportunity to have more items loose, in particular fresh fruit and vegetables?
Yes, I know there's a number of elements to this. I think firstly, with products that are being sourced from across the world, packaging is important in terms of the transportation often and the way the product's protected to ensure that it's fit for sale when it arrives to the shelf. But beyond that, I think there's two things. One is the development of new packaging technologies. So getting away from the sort of single-use plastics in packaging and using new materials which are more sustainable and friendly to the environment. I think there's a lot of really good work going on. We've already been selling products in different materials which are recyclable or sustainable or biodegradable. And then further to that, I think the work we do with some of our local suppliers is important. We have more control in terms of the way that produce is supplied with our local suppliers, and we work with a number of local producers and growers, and therefore we're able to do more with local produce in that respect. But it is a challenge because people often say, why can't you just sell everything loose? But it's not always as easy as it would seem because of the transportation and the care of the product. But I think key to it is actually looking for new materials and more sustainable materials as part of that.
Thank you. And we have a question from Judith Feeney, former board member, I think. I did submit a question, she says, last week about reaching out to far-flung members who were not able to shop locally or visit events. A bit of innovation needed here is the question. I guess that sort of relates to our earlier questions, but I think it's important to recognise wherever you are, you have access to quite a few of our services, whether that's energy or broadband or childcare in many parts of England, or indeed travel, which you can buy from anywhere, even from abroad, and indeed our healthcare services, again available throughout the UK, where you can buy a whole range of products and have your prescriptions delivered directly to you. So all of those things are available to members wherever you live. So I hope that addresses the point. But I don't know if you want to add anything, Phil.
Yeah, I mean, lovely to hear from you, Judith. And I think what we've got to be careful of is that, and I'm conscious that some organisations have pushed things online and then said it's now all online and that's your only choice. And I think our conversations with members has been, well, we shouldn't prevent members from engaging with us because it's the only way to engage is digitally through an app or online, and we're very conscious of that. And so we want to ensure that as members you can talk to us how you want to talk to us. So if you want to have a conversation face to face, you can. If you want to engage through the new app, you can. If you want to have a telephone conversation with us, you can. And so we whilst that's easier if you live locally, if you're further afield, then clearly we've got to look at that. And one of the things we're looking at now as a team is what we call a sort of member contact set up, and how that's set up and to what extent it's two-way. So that's just one of the ideas, Judith, that we're working on at the moment. So it isn't all about digital engagement. That's really important, and particularly for many of the younger members, but absolutely it's about making sure there's a range of engagements and that we do really consider people that live further afield. So I'd welcome your views on any ideas that you have, and no doubt you won't be shy in coming forward with that. So, but yes, certainly a lot of work going on that, and this is part of Alison Bain's remit as CMO, along with Pete Westall, to really think about how we engage our members across a range of channels, rather than just it all being digital.
Thank you. Well, we do have at least one other question in the queue, but I think we should pause now and take the voting results, which I believe Edward has ready, and then we'll go back and take as many questions as we have time for after that. Edward.
Thanks, Chair. So, of course, we had a half-year meeting yesterday as well, so we need to combine the voting results from yesterday with those of today, and then Civic will also just do a final check through. So these aren't formal results, but I can let you know yesterday that over 90% of members voted in favour of the 4 resolutions for each one, and the same situation today. So for the half-year report, 98.63% in favour, for the meeting minutes 98.57%, for the share of profits 95.06%, and for the rule change 90.91%. So it's very clear that the all the resolutions have been passed overwhelmingly.
Thank you very much, and thank you to your members for your support on all of those votes. So we have a question about why we're not a member of FSCS. Now, I think this is about our share capital and why we're not part of the Financial Services Compensation Scheme. And I think really it's important to say that our share capital, we're not a financial institution. Our share capital is the share capital in a business, our business, and therefore it is risk capital, and it's not eligible for to be protected by the Financial Services Compensation Scheme. And that's true for all cooperative societies. So I hope that answers the question. I don't know if there's anything you want to add to that,
No, I think that's right.
Phil. No, I think that covers it. So thank you for the question. We have a question. I would like to thank Phil, first of all, for his answer on capital. It says, I was confused by the timing of the decision on funeral care without a members' meeting where the realities pro the move were laid out. Funerals in the past were cash generating. Can our existing assumptions about finance work now for a future without the steady flow of deaths? Perhaps a interesting way of putting it, but anyway, I think the key question is that clearly we were generating a lot of cash in funerals. I think, as Phil has said, we perceive the funeral business to be changing, and that's been very much a driver of this. But perhaps you may wish to add to that, Phil.
Yeah, I mean, firstly, I think it's fair to say that the decision around the funeral business was not taken in a rushed way. In fact, it's something the board has been talking about for some considerable time as part of a longer-term strategic thought process. But the reality is that the feeling is, and certainly our feeling is, that the funeral market is changing. It's been a very traditional industry set in its way for a long time, and probably other than the invention of crematorium, not a lot has changed. But what you can see is that the market is going to change. I mean, there's been an investigation by the Competition and Markets Authority, and they've, in terms of publishing their findings, have called on funeral directors to do more around pricing and about competition, but also stated that they intend to revisit it once the pandemic's over, and that might include price caps, for example. And we've seen what's happened in the energy sector when regulators put price caps into markets. And so we do feel that the market is going to change, and therefore the profits that have been enjoyed in the past perhaps won't be as rich in the future, which may be the right thing, but that does affect how you look at the business. In addition to which, a lot of our business was concentrated in a few homes, which meant that if margins reduce in the future, a lot of the existing homes would become unviable. And then also, it's fair to say that our funeral homes needed a lot of investment. There were a lot of them been around for a long time, and they haven't had investment for some significant time. And so it's about choices, really. And I think what the board felt was that we can either invest capital into the funeral homes to stand still, which would be pretty much the case, or you could invest capital into growing the nursery business or the food business, which we know is being very successful. And because Central England are operating a bigger funeral business with their own crematorium, it was felt that actually our funeral homes would be in a better position to be part of that society, in the same way that Central England last year felt that their travel business would be in a better position to be as part of our society. And so that's really making more use of the movement and thinking longer term about where to invest. But it's been a profitable business for us. It's been a good business. Colleagues have worked very hard, and we shouldn't lose sight of that. But I think when you're making these kind of decisions for the long term, you are trying to look some way forward, which is not always easy to do, but it's the right thing to do, and I think it's the right decision that was made by the board.
Thank you. Now we have a question on new branding. The question is, the new branding looks good, but as your co-op, does this not heighten the risk of confusion with the co-op group and other regional co-ops? What efforts are you taking across the retail societies to either decrease confusion or make society memberships more interchangeable? In recent years, this has gone backwards, although I appreciate this is not uniquely Mid-Counties creation.
Yes, so just for benefit members, remind ourselves, obviously, that previously most of the co-ops in the UK, certainly the retail co-ops in the UK, were trading under a single national fascia, the Co-operative Food. And the Co-operative Group took the decision, I think it was 2016, to abandon their involvement in the national brand and create a new brand, which is the blue Pioneer logo that they now adopt. So it wasn't a replacement for the national brand, it was the Co-operative Group creating their own, which they own and have the rights to use. And we haven't got a right to use that fascia, and they've not granted us that right at this stage. There have been conversations about that, but they've not resulted in in an outcome where we could have used that fascia. And so the board decided to adopt the ICA mark, which is the mark that we are now starting to use, and you can see on these slides here. Because in effect, by the cooperative group leaving the national brand, that national brand wouldn't exist for the long term, and so we needed to make a change, and that's why that change was made. And it does create a degree of confusion. I think when we talk to members, not just our members, but members from other societies that shop in our stores, the biggest frustration is not being able to use cards in the members' cards in all of the society stores. Not so much about the colour of the sign above the door, but more so about actually why can't I use my card in that other card? Why can't I redeem my vouchers? And that's something we certainly are still talking about nationally amongst the CEOs about how do we deal with that, because that's the biggest frustration, and it's something we should fix. It's a frustration for me, and we would hope that we can fix it over time. And if you are members of other societies and you can help to bring some pressure to fix it, we'd be delighted, because we certainly would like to fix that.
Thank you. Now, we've reached 8 o'clock, but we have one more question that I'd like to take, because the member's been waiting for a long time, and that's about Tuffins. Tuffins was a chain of stores that we took over a few years ago, and the question is, has the Tuffins acquisition been a success? Church Stoke seems to struggle for a long time. Mahuncliffe appeared to be busy, but the site was then disposed of. Phil, can you help us with that one?
Yeah, I mean, I haven't got the exact details of the original acquisition, because it was certainly before my time. But from as I see it today, there's some good stores that we acquired as part of that acquisition, and those stores are doing very well for us today. I mean, Knighton, Clearbury Mortimer, and to name but a few. Churchstoke, it's obviously out on a bit of a limb, and it does rely on people travelling to it, because there's not much of a population there, and with all the lockdowns and restrictions on travel, it means that it's struggled in the last couple of years because of that. And so that store has its own unique challenges, but the rest of the stores that we have are doing well for us now. The decision on Mahuncliffe, which is again for members that aren't aware, is in Mid Wales, quite a long way out in Mid Wales, and also I think it was I say Holywell. There were 2 petrol stations with convenience stores, and the board's decision to dispose of those was not because they weren't doing well, it's because they were out in Mid Wales on a bit of a limb. In fact, Holywell's in North Wales, and it didn't feel operationally that made sense for us to run sites that far out, so that was the reason. And they were sold for good value, and that value's been reinvested obviously as part of our ongoing growth plans.
Thank you. Well, that brings everything to a close this evening. I do hope you found it informative. We've done our best to make this meeting as engaging as we can. We're very much looking forward to meeting face-to-face at our AGM next year on the 14th of May, and we hope to see you there. And it just leaves me to say thank you for taking the time to attend this meeting, and have a good evening.